Report Live. I'm Dan Odess, CEO of GlobalPro, here with a special edition of the Recovery Report Live. There's a lot of information that's coming out specific to consumers and property insurance, some things that we need to highlight. And that's why we had a little bit of a late start today, because actually I got some additional information from some trusted counsel that I've relied on a lot in the past to talk about things like this. We discuss these things at length and in detail. And I knew I'd be coming on today to talk about two very important issues. Unfortunately, these are two things that we have highlighted so many times in the past. We've talked at such great length about these particular issues because we made assumptions based on our own sample size and statistics and information we have about the habits of certain insurance companies and how they go about what they do and how they do it. So we want to make sure that you all are fully aware of actually what's going on. And now we do have data and information from the industry that we believe substantiates and supports a lot of the assumptions we are making based on smaller sample size that we have access to. But GlobalPro has managed more than $1 billion in loss and recovery, hundreds of thousands of claims. We represent thousands of community associations and business owners. So we do have a healthy sample size, but relative to the size of the insurance industry is where I get off by saying it's a smaller sample size, because it's quite frankly not as large or as significant as what the insurance companies have access to. But there's two aspects of this that I want to address. Number one is the tactics in which these insurance companies have engaged in with regards to drafting and writing estimates. Now, on prior broadcasts, I've talked about some of the things that we saw after Hurricane Ian, some of the issues and challenges that we have witnessed with regards to the claims handling and what we see from the evaluations. Now, this going back to Superstorm Sandy in New York in 2012, you saw a very prominent engineering firm get accused of, by its very own engineer, of modifying, changing reports and engaging in this fraudulent tactic to avoid having to pay claims, or to the benefit of the insurance companies and not having to make those claim payments. So, now fast forward, you have Hurricane Ian, which damages the west coast of Florida, and you see substantial damages in those areas from a tremendous storm that packed a massive punch and destroyed infrastructure, buildings, put businesses out of business, just absolutely obliterated homes. And then you saw accusations, again, by insurance companies' own representatives that their reports are being modified or changed in ways that they believe were not in the best interest of the policyholder. So these particular issues are somewhat coming full circle and being exposed, right? These things, these tactics by which these insurance companies engage in that we often see, again, on a smaller sample size, we're seeing their own representatives step up and say, this isn't right, these are the things that should be going on. So one of the things that we're also seeing is an attack on the actual estimating software that is largely used by insurance companies. So if it wasn't bad enough that adjusters were intentionally, or insurance companies' representatives were intentionally modifying, editing, and reports so that claims were underpaid or not paid at all, we now see where they've used and manipulated the software, or the intent of the software, to make sure they don't pay by selecting new construction rather than reconstruction, because they know the prices are different. And I have some statistics here, and I'm holding the phone. You probably see me look down a few times here. So a study has shown that that a taxi may underpay a claim by 10 to 30%. Now, this is a report substantiated by, like I told you, many years of evidence has suggested this, and class action lawsuits, and the difficulties with actually bringing those classes together, and the insurance companies are fully aware well of that, and the litigation tactics, right? And I want to hone in on this issue of misuse of Xactimate, because Xactimate, if you don't know what it is, it's an estimating software that is used to quantify the value of your loss and damage, most often by insurance companies' adjusters. Now, there are other software systems out there that are available to you. And in prior broadcasts, I do talk about the contrast between Xactimate and potentially the software system that's being used to evaluate the appraised value, or which is used in evaluating your, or to calculate your premiums, which typically is something like Marshall Swift, and the conflicting or contrast between the amount that is associated with your property when they're appraising it to calculate how much you're going to pay them versus the software they then eventually use to calculate what they're going to pay you in the event that you have a loss. That's an important part, because it has been found that adjusters for insurance companies are selecting new construction pricing rather than reconstruction repair pricing, which is significantly at times higher than your new construction costs for obvious reasons. The difficulty in working in a nearly finished or finished space that has been damaged versus working in a concrete slab where there's just simply framing up, right? There's a certain care and responsibility. There's additional work, time consideration, cost associated with it, having to modify materials in order to fit it in where damage occur rather than just simply using a blank sheet of drywall, painting, etc., etc. These things are much cheaper on a new construction basis than they are on a reconstruction, and everyone is very well aware of it. And so certainly these adjusters have realized that if they click on the new construction or use the new construction, then they can do it that way. Also, too, what we have found is if you actually dive into the unit pricing for remove and replace it, they're using demo pricing rather than the actual cost of doing it. There's all these little intricacies of it to shave off a few pennies, which add up to dollars, which add up to more significant impact to how your claim is being paid. So there's a call for fair practices, and there's many advocates out there advocating and pushing and urging insurers and legislators to take a closer look at this, at how they're utilizing this highly adopted software system that oftentimes insurance companies will refuse to accept an estimate of damages from a public adjuster or a contractor, from a policyholder, if it's not even written in Xactimate. And then they talk about what pricing sheet they're using, is it updated? And then we come to find out that they're actually selecting on the wrong kind of pricing database. Obviously, Xactimate is aware that the cost discrepancy between new construction and existing or repairs or reconstruction as it relates to a loss that may have occurred. So why is it that insurance companies doing this? So we're seeing, there's this talk about how it is the practices of public adjusters and lawyers and mitigation contractors which has led to this increased amount of litigation, which is directly correlated with the cost of insurance in Florida as well as Texas and other locations. And in walks a new study, which was just recently published, which really throttled the industry. So if it wasn't bad enough that on top of, if you think about it, let's put this all together in some of the prior broadcasts, right? You had a discussion by us about Hurricane Ian. You had these accusations by adjuster talking about modified reports. Prior to that, you had Superstorm Sandy with engineers modifying the reports. And then you have this recent accusation of them selecting new construction rather than the pricing that they fully know and is in Xactimate to properly assess damages for a loss or damage, which is repairs, all right? And then you have this just absolute bomb that goes off as it relates to the overstatement and the funny data, I will call it, that is being used or was used to substantiate overhaul of legislation as it relates to litigation practices, attorneys' fees, et cetera, et cetera. Now, if you've tuned into my broadcast, and if you haven't hit the subscribe button, I'm going to remind you right now, hit it. Because on prior broadcasts, I discuss and how I find it strange how there's such emphasis on litigation tactics and public adjusters and mitigation contractors and less focus on the practice of insurance companies when you have all of this data and information and reports and their own people blowing the whistle on their own practices year after year. And it's the litigation practices of a few attorneys, public adjusters, and mitigation contractors in isolated markets within a broader market in which the legislator serves and drafts bills and makes laws for, that is contributing to this immense, massive increase in costs of insurance that they try to tie to that rather than market conditions, right? Because if you do enough studying of insurance companies, particularly the publicly traded ones who publish their earnings reports and their investment practices and how they earn and make money, as we've discussed in prior broadcasts with our very own Matt Sangstein, who was in Wall Street and was actually there, boots on the ground, looking and working with insurance companies and their investment vehicles and looking at different tactics at one time in his prior career, right? And he, and one of our broadcasts, and I'll make sure down below in our description it actually cites to it, talks about how that the real issue here has very little, if not nothing, to do with the litigation practices and the claims handling practices of public adjusters, more so about insurance companies, and also the markets, right? As they make investments and they take your premium dollars and reinvest those things to make money on your money, right? And roll that premium around, that, when the market starts to suffer, they start to suffer. And so then they look for ways in which they can make up for the things because they have shareholders to report to, et cetera, right? So it's really important that we understand this. Now, again, these are assumptions we're making based on a lot of like our own data and our own experience and the reports being put out by these insurance companies in these markets. So taking it a step further, there's a recent article came out in the Insurance Journal, and again, it'll be down below in the description. Make sure that you have access to it, which, and I'm going to give some generalization. It highlights concerns that insurers may exaggerate the impact of litigation and fraud to justify rate increases. All right, they're utilizing this. They're to justify and exaggerating it, right? Another issue is that they're emphasizing that the data often cited by insurers might include inconsistencies and even fraud by insurers themselves. Now, the reason why I highlighted Sandy, Ian, also talked about the Xactimate issue that just recently came up, it works right into this, right? It all is related. And I want to, again, emphasizes that the data often cited by insurers may include inconsistencies and even fraud by insurers themselves. Now, again, if we listen back on the Recovery Report Live where we talk about a lot of these things, and this is all about giving you information you can use. We do this every single week, every Thursday. When you tune in, you're going to hear things like this. As a board member, and I'm talking to you as community association board members, as property managers, lean in a little bit here. You are fiduciaries. If you're to be making decisions for your association based on the actions of an insurance company, based on information you have, if you don't have a representative handling your claim for you, how are you protecting the financial interest of your association and its members? There's no way. Just like you hire an accountant, hire a lawyer, right? You don't go to court and say, hey, judge, how are you going to rule? Hey, Mr. IRS, what do you think I owe? No, you file your taxes appropriately and you work with your licensed accountant to put those assessments together to submit to the IRS. Or you work with your lawyer to respond to a lawsuit or draft a lawsuit to file it against someone else. That's what we do, GlobalPro. We represent your interest. So if you're not engaging GlobalPro, then how are you protecting your interests? Given all of this information, given everything that we know about these processes, consumers protections is the most important thing that you should be focused on right now, because a lot of what you've been told by your insurance broker and agent about your rate increases, the impacts of your loss runs, and your claims, only your claims, as it relates to your actual premium dollars and what you're paying, and the ultimate focus on that in and itself. How often I get phone calls from associations or managers concerned about a claim who then take a pause and say, you know what, we don't want to pursue this claim yet because we're going through a renewal. We'll wait until after the renewal because our broker's saying our insurance company won't offer or provide us an indication as to what they're going to charge us next year in a renewal, or I can't go to market. Meanwhile, the real driver here, as we're seeing play out, as we have touched on so many times. In fact, the CFO just came back to roll back statements about accusations that were made after, particularly Ian, right? I think he used the word locus, okay? And then there was this report that came out, and there was publicized a statement that may have come from their office, and in response to that, they published a follow-up statement on X, specifically addressing the need for public adjusters and the benefit that they provide, right? We are the yin to their yang. We are keeping them honest. And if you are a board member or a business owner, you have fiduciary obligations. If you don't have representation, you are not protecting your interests. And your brokers and agents do not represent your interest in a claim. They're there to help you buy insurance. They're not there to adjust your claim. So if this information is useful to you or others, hit the subscribe button, like us and follow us on all our social media platforms. We'll make sure all the information that I cited to is down there right below in the description so that you can hit that link and read it for yourself and formulate your own opinions of this. If you have questions about this or any information about our opinions on this matter and others, please let us know. If there's something even better, if there's something that we can do to help you, whether it's placing insurance or recovering from a loss, that's what we've been doing for more than a decade. And we want to do that for you. So hit the subscribe and like us and follow us on social media and join us every single Thursday right here on the Recovery Report Live.